Hello everyone, and welcome back to another video. I do hope that you check out my GameStop video as well, so go look at my channel, and please do consider subscribing. Let's take a look at another meme stock, AMC, and boy, this one is awful. This is horrible. This is a bad stock to own. Um, you could get absolutely slaughtered on the downside. It looks like they have price targets. There's 8 total analyst targets, and it's mostly a hold, and it's a $3.30 target, meaning it's 93% down from where it closed on Friday, June 11th, 2021. At about $49. My goodness, this is horrible. This is an awful stock. AMC just got slaughtered in the pandemic, and they had recently they did an equity fundraising, like they sold more shares. Good for them. They raised cash, to keep the operation going. Because why not when you're up 15% in a single day? Haven't really seen much of a slowdown from that, high volatility, high volume, but wow, this is just awful off of all the fundamentals. So let's get into it. Please subscribe. So this stock has a rating of 3. It has an underperformed score of 3, and that is really bad. And you already saw the price target. Let's take a look at the income statement. So their fiscal year ends December 31st, 2020. And at the end of 2020, they had $1.2 billion. Now, the part where I feel bad is up until 2019, they actually had like steady revenue growth, and quite a lot too, from 2016 to 2017, about 1.8 billion in in an increase. And then in 2019, they did make their most money ever, but then obviously in 2020, they lost about $4.2 billion in revenue. I think that the only revenue they probably made literally was from January to March, like middle of March, late March of 2020. So they made 1 quarter's worth of revenue, which makes sense. And they were basically closed and couldn't open and couldn't do much of anything. In terms of, they don't stream. You don't stream stuff from AMC. You stream it from HBO Max and Netflix. So this makes sense as why this sucks. This is awful. And let's see, their total net income was makes sense, about negative, negative 4.5 billion. Compared to a small loss in 2019, about 149 million, 4.5 billion is quite the leap. That's pretty awful. That's pretty bad. It's not really what you want to see. So that's why this stock absolutely cratered to start the pandemic and in the middle of the pandemic. And they didn't have much cash. So let's just take a look at 2020. By the end of 2020, they had total current assets of 487 million, and they had total current liabilities of 1.5 billion. This is what you don't want to see. This is where insolvency comes in. This is where companies do not remain solvent and they cannot pay their bills. They were basically short their current needs by 1.1 billion. That would have to all be restructured in some way or shape or form in a bankruptcy court hearing. That's a lot. This is something you don't want to own when you see something like that. It has no short-term prospects. As far as long-term prospects, they had about 10.2 billion in assets and about 13 billion in total liabilities. So remember, this is short-term and long-term together, and again, they have about 3 billion less in total assets than they do current or total liabilities. And their total long-term debt also shot up too. They had to increase from the year before, from 2019, by about $1 billion, and that's not what you want to see. You don't want to see. A good, solid CFO will make sure that the long-term debt does not grow at such a 20% clip. So with that being said, let's take a look at the cash flow statement. In the cash flow statement, we can see the negative 4.5 billion in net income. That's where it starts out. And we can also see that they, in their financing activities, we have a lot. We have a lot going on here. We have they issued 760 million in long-term debt. They repaid only 26 million. That's probably like the lowest. That's probably like one of the lowest loans. Maybe just get rid of it. I'm just guessing there. And then equity issuances. They only issued 264 million dollars worth for the year. But if we actually look at this one for the quarter, because that's pretty much it, as the story goes for the uh, cash flow statement on an annual basis. Let's see, like I said, I know that recently in at least Q2 of 2021, right now they've only reported for Q1. At least in Q2, I think that they have issued more equity, not debt, equity. So let's see, equity, yeah, so in this Q1 alone in 2021, they issued about $581 million. So that compared to like look at the previous quarters, basically in 2020, that's nothing. Like they've done a lot more too, like I said, in Q2. So we should see that show up soon. And if we look at a portfolio of AMC, it goes back to January 2014. That was when they IPO'd, and we can see that a $10,000 investment is now worth about $1,400. So you lost about 25% a year. This is, again, this is something you don't want to own. It's a meme stock, so you might get 15% lately in a given day, but you do not want to own this for the long term. Look at this. It is down significantly. It looks like they actually took, I'm actually noticing now, I think, let me go back to here. Yeah, they actually, Portfolio Visualizer took AMC off of being able to backtest because they only did it to December 2020. And remember, the meme stocks really took off in January 2021. So they're not really including any of the gains from that time period, from literally anything in 2021. It just stops here. Here back in November, they had, that's the start of the meme stock stuff all the way through, like January was one of the peak months of 2021. Anyway, this is what I wanted to show you guys. AMC is an awful stock to own, and I would never own it personally. I don't understand why the meme people like have held on to it for this long. I definitely would have sold it when it hit like 40 bucks even compared to how low it was before. But that's just me. So let me know what you guys think, and see you guys soon. Check out my other videos.